I'm Dr. Sherry Peele Jackson, and this is the Earn and Invest podcast.
I hate taxes. Not for the reason you might think, however. I don't mind paying them. I hate thinking about them. I hate trying to figure out which rules apply. I hate thinking about the different loopholes that exist and contemplating the difference between ethical and legal. Is there a difference? While our system of taxation in the United States is woefully too complicated, it is a fact of living and doing business in our great country. This definitely begs the question of how we can judiciously proceed through this landmine filled maze of tax planning and reporting to avoid such pitfalls as the dreaded audit and penalties. How the heck do we do this? Dr. Sherry Peele Jackson is a retired IRS agent, CPA, and certified fraud examiner who has helped over 100,000 individuals and businesses keep, protect, and grow their earnings. With over 35 years of experience, Sherry is an expert. With over 35 years of experience, Sherry is an expert in tax reduction and wealth building. Through her speaking, books, and consulting, she has shared her knowledge to not just educate, but also create lasting security. Dr. Sherry Peele Jackson, welcome to Earn and Invest. I guess the big question for me is the IRS out to get us?
Thank you, Jordan, for having me on. And I would have to say yes, because it's our money. And if you read back in the Constitution and the Declaration of Independence and all of these documents and the spirit of 76, that was what we were about. Now we have a system of taxation without representation. We have money going to all kinds of things that we would never want to do with our money. And yeah, so they're out to get your money.
That's a surprise, your answer, because you worked for the IRS, didn't you?
I did work for the IRS for 7.5 years. And when I worked for them, I wasn't aware of all this, but the information started to come to me after I left.
Tell me about the process of how that happened. How were you working for them doing this? You left, and then all of a sudden you had this epiphany. Where did it come from?
So when I was an IRS agent, I started moving up in the ranks, and my cases started getting larger. And as opposed to getting small mom and pop companies, I started getting the larger businesses, partnerships, and medium-sized corporations where in the mom and pop situation, I would be meeting with the owners and they were really proud of their businesses. And then they didn't have the representation of the corporations and the partnerships. So when I would go and audit those, I would never meet the owner. There would be the CPA or the attorney, and they were screaming at me, and I was screaming back at them. And that kind of thing showed me that there's favoritism. For example, I'll give you a case that I had. It was a medium-sized corporation, and they were doing some things that didn't turn out to be within the code, let's say. And they owed maybe about $127,000. The protocol is for me to write the report up, charge them with the $127,000. And then if they wanted to appeal, the case would come back to me after they did their appeal so that I could rebut the appeal. So one day after this case was long closed, I was walking past the secretary's desk and I saw that name on a folder and I picked it up and it was that case. And guess what? It had been closed. It had been closed without my rebuttal, and it had been closed for more than half less taxes. So I asked my manager, I said, Mike, what's going on here? I didn't get a chance to rebut this appeal. He said, Sherry, leave it.
Hmm.
And later on, I found out that the IRS attorneys and the other attorneys, the ones that are working for the corporations, they make deals. And one of the deals that I heard about was, they're negotiating. This company owed a lot more money, and the attorneys were together in the boardroom at the company, and one of the IRS attorneys said, "Well, um, if you can get me a date with the secretary on the second floor with the
Oh,
large breasts."
no, no,
I am not
no.
kidding. I am not kidding. And these things do go on. I have attorneys. I work with attorneys now that basically verify that these things go on. And so I've always been an advocate for the little guy. And all of these companies that I audited that owe all this money back, they either had to close their doors or they would struggle to stay open after this large amount of tax plus penalties and interest hit them. but the bigger ones get away with everything. And that wasn't the reason I left. That's another story. I just started to have so much pressure, and I had little children. I was married and had little children, and I wasn't giving them, as a Christian wife and mother, I wasn't giving my family what they really needed. So I quit. I didn't have another job. I just quit to come home and be June Cleaver, if you know who that is.
Mm.
And after I quit, that's when people started coming to me and saying, "Hey, have you heard that the income tax is being misrepresented and misapplied to the American people, and it's not really us that are supposed to be paying the tax." And back in Bretton Woods after the World War II, all these other things. And I listened to them, but after a year of being home, I opened up a CPA firm, got some large contracts, and I was rolling along. One of my clients sent a woman to me for me to talk to, and the woman basically water hosed me down with a whole bunch of information about the income tax. And I started listening and started doing research and realized, hey, you know what? It's legally wrong, but it's also morally wrong. And then the story goes on from there. So it was people. Even one of the Texas senators came to me and said, we're not supposed to even be paying income tax. Because when you tell people that you're an IRS agent, they are afraid. And I was at a party one time and a guy cursed me out.
Hmm.
He really did. But when I left, they weren't afraid to talk to me about the things that they'd heard. So that's how that happened. It wasn't really my epiphany. It was just people from all over and all walks of life telling me, hey, we got a problem here, Sherry.
And you and I talked about this before we started. You are interesting for many reasons, but one of them is that your doctorate is a doctor of ministry. So the ethical, moral, and legal aspects of what's going on here are very much in your purview. You kind of made the point that the system seems to skew to the wealthy and the bigger corporations. Do you think that's because the laws are bad, or is it the people are bad, or is it both?
I think it's both. I think that the way the system works, not just with the IRS, but anything, if you have the money to defend yourself against bad laws or good laws, then you're going to be better off. So, in the case of the IRS, the ones who got off with little or no tax were the ones that were already paying CPAs and attorneys to defend them. Whereas the smaller people didn't have that money, and the only defense that they had was, you know, them, and they didn't know the law, they didn't understand the codes and any of that. So it's a combination of those, Jace Jordan. It really is. It's a combination of those, Jordan. It really is.
And you've made it clear, at least through your experience, you think the application of income tax has not necessarily been appropriate, especially when you've noticed this for individual clients, specifically smaller clients.
Specifically, yes. Let me give you a moral example. Jason, I'm coming over and we've
Jordan, just
decided,
just 1 second, Jordan, because if you say Jason, it's going to really confuse
oh
people.
Lord, I
It's
did
okay.
that. All right,
You
thank
you
you.
corrected it last time, so just say
And
three.
I don't know where I get Jason from. It's not even, okay, hold
Yeah,
on.
no problem. I will edit all that out. So as
Yes,
long as you
thank
can kind of
you.
start back at you were saying, Jordan, let me give you a moral. You want to do that on three,
Yes.
2, 1?
So yes, Jordan, let me give you a moral example. I'm coming over to your house. We made a decision that I'm going to cut your grass. We made a decision that you're going to give me $100 in exchange for cutting your grass. I use my arms, my legs, and my brain, which is my life force, to cut your grass, and you give me the $100. Now, let's take the smallest Walmart in the country. Yesterday, it made $100,000, but it has salaries to pay. It has to pay utilities, maybe rent for the building. And at the end of the day, they have, let's say, $70,000 in expenses. Well, that Walmart is not going to pay tax on the $100,000 that came in. It's going to pay tax on $30,000, which is the gross less its expenses. So the government lets the Walmart deduct its expenses, but we don't get to do that. We are paying tax on the whole 100. And that's morally wrong, especially since our founding documents say we hold these truths to be self-evident, that all men are created equal and they have unalienable rights to life, liberty, and the pursuit of happiness. Unalienable means you can't put a lien on my rights. So how am I going to have life, liberty, and pursue happiness when you're taking 51% of the earnings that I have, which is the income tax from the federal, the state, the sales taxes, and all these other taxes? We are in a survival mode as opposed to thriving when this happens.
So we've been talking about this from the side of the system. I want to turn it around to the other direction. Is it ethical and moral to pay as little taxes as possible? Like, is it okay to utilize these systems, even maybe if that was not what the people who wrote these laws planned, because we know there are tons of loopholes. Is that okay, especially if we're one of those little guys that you're talking about who is maybe not really being treated fairly by this tax law?
It is definitely legal and moral for you to pay the least amount of tax. So the ones that have the money, they pay the CPAs $50,000 a month to figure out the loopholes. The other ones, they need help. Small businesses that I deal with, they don't have the time to do that. They depend on me to find the loopholes. And there are loopholes for us little people.
Take your average person, especially maybe either a small business owner or just your average individual person who works for a company. Are we leaving lots of money on the table? Is the average person not doing this correctly?
For sure, the employee is working for a company. They don't have many options for deductions at all. However, the small business person can write off just about everything but the kitchen sink. Internal Revenue Code Section 162 says that you can write off all ordinary and necessary business expenses. Well, what does that entail? In 1994, there was a tax court case with a woman named Cindy Hess. Cindy Hess wrote off a breast enlargement. The IRS saw that large deduction and they laughed themselves under the table. And they took the deduction away, of course. But Cindy went to tax court and Cindy won. Why did Cindy win? Because Cindy Hess, better known as Chesty Love, was a pole dancer.
Hmm.
And she was getting older and she had to keep up with the young girls. So it was ordinary and necessary for her to get the breast enlargement. And she won her case. Ordinary and necessary means common, acceptable, helpful, and appropriate. So if your expenses are common, acceptable, helpful, and appropriate for your business, you can write off everything but the kitchen sink. But you got to have a business. So
I was
an
about to say, so
employee,
you have to have a business.
yes, you have to have a business. An employee has a cell phone, can't write it off. An employee has internet, can't write it off. An employee drives around, can't write it off. It's more than likely reimbursed by the company if they're going on work duty. However, the person that has a small business, for every 2 miles they drive for business, that's $1. So you're throwing $1 away if you don't have a business. You're throwing a percentage of your cell phone. Business use of home. There are so many regular deductions, and there are a lot of credits and loopholes out there that normal business owners can use. And that's what I teach them. I want my people to pay as little as possible into this system. Instead of trying to cut the head off the beast, we want to starve the beast.
So this means for people who have a thriving W-2, it might make some sense for them to develop a small business on the side. Is this what I'm hearing you say?
Yes, Jordan, it makes all the sense in the world for them to start a business because a lot of my clients and people that I talk to that have those higher W-2s, their main thing is they're afraid of the pink slip. I'm pretty sure you know that a lot of the larger corporations are laying off like crazy, all the way down to Walmart laying off. So they want something in place to secure themselves in case they get the pink slip. If they get the pink slip, they have this business in place to tie them over until they get another job, or they just scale the business up and don't have to go back to a job. But yes, that's one of many reasons why they should get a business. That is one of many reasons that they should start a home-based business. And I say home-based because if you go out and get a brick and mortar, then you've got rent outside of your mortgage. It doesn't make sense. I feel like the people in New York way back in the day, they had the businesses on the bottom floor and they would go up some back steps and go to bed at night. So they only had one mortgage or rent, and that's how you thrive.
So my mom always laughs at me. My mom is a CPA and she's been working with me on my tax return for years. And I was a traditional doctor. And for a very long time, I was employed by someone else. And then I owned my own practice and corporation. But since then, I've left. And so I have a bunch of really small businesses, right, surrounding this podcast and the books I write and everything. And so I got to discover the self-employment tax in Illinois, and I was a little bit appalled at actually how much tax I pay. I mean, it comes out to about 50% of what I bring in. I mean, it's no joke, small business people. And I never really realized it to this extent. I've been lucky enough to make lots of money. I've always kind of skewed liberal on politics. So I've always kind of felt, well, I pay my taxes, but that's what you're supposed to do. And then I started thinking, if I had to depend on these small businesses to make a living, man, that total 50% tax rate when everything else was added up and the self-employment tax was thrown in and all that. I mean, that's kind of killer.
It really is. And if you don't know how to mitigate the taxes, then you'll continue to float in that river, which is not good. And it's discouraging because you got business owners that if they don't know what they're doing, then they're going to be owing just as much as when they were full-time employees. So they need to learn what the tax code said. The tax code is actually written for businesses. Back in 2016, when Donald Trump and Hillary Clinton were debating, Hillary Clinton said Donald Trump didn't pay his taxes, and everybody they sucked all the air out of the room. Now I don't have TV, I don't watch TV, but people called me the next day. Did you hear? Did you hear? So I had to go out online and see. And then, after I looked at it, he said, "I'm a smart man." Well, he is a smart man, whether you like him or not. He knows how to utilize, or put it like this: he has people that know how to utilize the tax code in his favor. And when you can utilize a tax code in your favor, then they can't say anything about that. And you just get your deduction. So you can turn someone that has a gross income of $100,000, just like we talked about with that small Walmart, if they can write off $70,000 of that and only have $30,000 of taxable income, that's a good day.
Yeah. And I always remind people because we interact also with lots of people who do real estate in this community. And so there's a lots of talk of depreciation, which is an incredibly powerful thing and a very good way of lowering your taxes. But I do remind people that you're not actually getting rid of those taxes, you're deferring those taxes. And a lot of people don't realize, for instance, the cost basis of their property goes down. And unless you are going to die with that property and give it to the next generation, if you ever plan on selling that property, the tax man's going to get you eventually. But these are very possible ways of deferring as long as possible, right?
That's
As
true.
well
And
as
yes.
when you can writing things off.
That's true. That's true. And as far as the real estate, you can defer just about forever until you give that property over, because we got the 1031 exchange. And if you do that
Right.
correctly,
As
you
long as you're
can.
willing to die with it. As long as you're willing to die with it. Because I've
Yes.
1031 to exchange things and then decided, hey, I want to get out of the real estate business. And all of it eventually catches up to you. I paid whopping taxes when I eventually sold. That's fine, right? I understand this. I understand what it is. But a lot of people aren't aware of that and kind of find themselves very, very surprised all of a sudden when they go to sell their property, when they realize that maybe after 10 or 15 years being a landlord is not for them. We've been talking about moral, ethical, legal ways of paying less taxes. One of the reasons that people are incredibly careful with this is we are scared of being audited. So, first and foremost, you've now worked both sides of the IRS. How likely is it that an average person, so we're not talking about businesses here, because businesses have big legal teams, they have people that take care of this. But your average person or average small business person, how likely is it that they'll be audited?
Well, two different things. The average employee, it's really not likely that they are audited because, again, they get a W-2, they have that tax taken out. There's nothing that they're going to get. You get an audit, and then they look and say, okay, you made $100,000, you had $17,000 tax taken out. They're not going to get anything out of that. IRS wants to go after the low-hanging fruit that's going to get them money. When I was an IRS agent, and I can't speak for what's going on right now, but you got rewards if you collected a lot of tax. It's the small business owner that has a higher chance of being audited, simply because when they hire new IRS agents back in the day, and I think they still do that, they let them cut their teeth on the small businesses. They
Hmm.
didn't send them into the wolves of the larger businesses because they would be intimidated by those CPAs and attorneys because they didn't have any experience under their belts. So we get training, and then they send 30 IRS agents out to these small businesses to try to look at these deductions to see if these people really had these deductions. So it is very likely. The key is having your records. And if there's nothing else that I can portray to your small business owners or people that want to own a business, is when you do have your business, you must keep your records. I know sometimes it's hard. I've got clients that put their receipts in the dash when they come out of the Home Depot and they fly out the window and all that. And some people don't want to use the technology, and some people are afraid of it. And I really don't use the technology where I'm putting receipts into my app because I'm afraid that, if the phone breaks or, drops in water or something. I believe in those hard receipts. So keeping the records is going to save them even if they get audited. I don't want people to be afraid of an audit. I want you to be confident that if you do get audited as a small business owner, that you are going to pass the audit because you have your receipts. Another tip that I wanted to say is that people don't understand this, because what I do is I help people that are being audited. That's one of the things that I do. So people come to me and say, "Hey, Sherry, I got an audit letter." And I love that because I work behind the scenes. I don't go and represent them in front of the IRS. I go and work behind the scenes. And when they tell me, I say, "Okay, what about your receipts for this year?" "Oh, I have my debit and my credit cards." And that's a big no-no because they do not count. They say, "Well, you could have bought anything from there." You have to have receipts. The way I teach my clients is get the receipt. And because of this funny paper that they use now that disappears, it's like the disappearing ink paper. I have them make a copy of that receipt and staple the original. So if they're audited, which usually people are audited 1 or 2 years after. So right now they'll be doing audits for 2024, I'm sorry, 2023, 2022. First of all, you need to keep them together. Second of all, you need to make sure that the ink on your receipts is good. And then write on the large sheet of paper that you copied what it was for. For example, if I go to Walmart to get my paper, I get the boxes of paper. So I have like 10 reams of paper. And let's say if I buy something that's not business related, I copy that receipt and I put down the paper as being business related. And I know it sounds tedious, but it's going to save them in an audit. It's going to save them.
Yeah, I use an app called Dext, which my accountant gave me, which means I scan everything and it goes directly to them and then they print it out. But I hear exactly what you're saying. It's like the onus is ultimately on you. And a lot of people are surprised that they can't just pull up their credit card bills.
Yeah. Yeah. It's a shocker to them. It really is. So that's why I wanted to tell everybody in your tribe, don't depend on your debit or credit cards. Keep receipts, regardless of whether you have them on paper or in an app.
We are talking to Dr. Sherry Peele Jackson. She is a retired IRS agent, CPA, and certified fraud examiner who has helped over 100,000 individuals and businesses keep, protect, and grow their earnings. We're going to take a short break. I'm Doc G, and this is the Earn and Invest podcast. All right, I'm going to read us back in a moment. Any problems, questions? Doing good? All right, good. Let me just see where I want to restart.
I'm
All
just
right.
not calling you Jason again.
Yeah. Don't worry about it. I'm not, it doesn't hurt my feelings. I just want to make sure it comes out good for the recording. All right. On three, two, one. We are back with Dr. Sherry Peele Jackson. Sherry is an expert in tax reduction and wealth building. Through her speaking, books, and consulting, she has shared her knowledge to not just educate, but also create lasting security. And we've been talking about something that makes people nervous, the IRS and paying our taxes. Sherry, we were just talking about this idea that small businesses often get audited. Are there certain key triggers or things that small businesses tend to do that really get the eye of the IRS agent?
Yes, there are. And in my book, How to Stick It to the IRS, I have a chapter that's called Red Flags That'll Get You Audited. And there are several of them. First of all, when people go to places like H&R Block, Jackson Hewitt, and those, and they bring their records in to the tax preparer, that person is going to just put that information on paper and give it back to you. So You want to pick somebody who's going to dig and ask you questions, because when you dig, there are a lot more expenses 9 times out of 10. Now, 9 times out of 10, when I audited someone that had their tax return done by one of those preparers, there were lots of adjustments. Round numbers is the biggest thing, Jordan, because they know you're guessing. So if all your expenses end in 50 or 100, they thumbs up for that one. We're going to audit that because that's one of the biggest low-hanging fruit. And one of the other ones is, well, basically having a home-based business is, you're
They're
ripe
coming
for
after you.
audit because they train with those and they feel like that smaller business is not going to have the CPAs and attorneys to help. Mileage is another one. People tend not to keep their mileage properly and they end up guessing at it at the end of the year. So if you have some kind of a mileage app or some kind of a calendar where you're writing down where you went and who you saw, that's going to be better than at the end of the year guessing your business miles, because that's an area that tends to have more. And on the side of not having a business. Now, these days, the standard deduction has been increased so much, but those who do take their itemized deductions, they look really, really heavily at charitable contributions. So whether that be cash charitable contributions or non-cash charitable contributions, those, and also another big one was business use of home.
Mm.
So you have to do that calculation correctly. A lot of people says, okay, well, I'm using one of my bedrooms. Well, if it's a bedroom, the whatever you use for business use of home, that area has to be exclusively used for business. Even if it's a part of a room, if you went and bought a partition and set aside part of a room, that area can be used. However, it's got to be used as business use of home. So I know when I was doing smaller businesses, as soon as they said, I sit at my kitchen table, that deduction was gone. It was gone. Now, some of the larger businesses that are still home-based businesses, they may have some transactions that may be international transactions. Those are looked at they scrutinize those a whole lot also.
So let's get into specifics here. First and foremost, what does getting audited look like? Is this something that comes in the mail? Is it someone who shows up at your house? So that's the first question. And then second question is, if you are audited, whenever this event happens, what is the first thing you should do?
Okay. So there are several types of audits. There's the correspondence audit, and that's when you get a letter in the mail saying, we want to audit your 2023 tax return and we want to look at these three items. So let's say if it's a small business, usually don't, let's say it's an employee and they want to look at the deductions that employee took on, let's say their Schedule A. Then all you have to do is put all that information together, pack it up, send it back. That's the correspondence audit. Then you have the office audit. The office audit is when you get called into an IRS office. You get to sit with someone who may or may not have a bachelor's degree that's going to look at just a few of the items that you deducted on the tax return. And they're going to look at your bank statements because they want to see if your deposits are more than your income.
Do you go in alone to that, or is that time to bring either a CPA or a lawyer? Or are we not there yet?
Some people would bring their CPA or lawyer, and some people didn't. It just depended on whether they had the money to do it. Now, at that level, those audits were of very small businesses, if they were, and those people didn't have the money. So normally when someone came in for an office audit, they didn't have, and they didn't really think they needed it because they kept their expenses and they went in, and if they didn't keep their expenses, then they just got the extra tax. Now you move to the field audit. So that's when you get an internal revenue agent. I was an internal revenue agent. So I went out into the field. I was told to go to these people's houses or their businesses. A lot of them were houses. So they were doing business in their homes. Some of them had the smaller ones, which still talking about the smaller businesses before I moved up to the corporations. Some of them did have business offices that they rented, but that's something that your listeners might want to know. We were taught to audit the whole person, not just their records. For example, I had a case where there was a nightclub that was making consistently for 3 years $21,000 a year net income.
Hmm.
And I went to the guy's house, and it was like a $750,000 house. And so when those are discrepancies there, where's the money coming from? And so that ended up, that particular case, I ended up turning over to the criminal investigation division because there was a lot of money and even some drugs involved in that. So we're not just going in to look at a sheet of paper as a field agent and say, okay, show me these deductions right here. Show me the receipts for these.
Yeah,
Then you
so
have the
be
criminal investigation.
beware, right? So
Yes,
beware.
yes.
When it's like when law enforcement walks into your house, maybe the same with the IRS. They're looking at everything.
Yes, they're looking at everything. And a lot of people that are well taught will say you can't come into my house. Now, you're not required to let the IRS into your house. And if you have inventory in your house, that's really the only reason that they have to come in. If your business has inventory, they have to on their schedule of things to do, they have to look at the inventory. So if you have inventory in the garage, you can let them in the garage. I have clients that meet them at Borders bookstores and at Starbucks because they don't want them anywhere near their house, and I don't blame them.
So those you mentioned three types of audits. Are there any more? Or so there's you said there's the correspondence, there's the in-office, there's the home or business visit. Anything above and beyond that?
Yes, so there's what I call sneak audits and MSSP audit. So the sneak audit is when the IRS decides that they're going to go in a particular area that they think there's abuse. Let me explain that one. The the currency transaction report, the CTR, is a report that's supposed to be put out by any business for anybody that gives or transacts in $10,000 in cash or more. So that's what they do in Las Vegas and all that. So one of the cases that I had, they targeted a Mercedes-Benz dealership and just, I don't want to say raided, but they walked in unannounced and said, okay, give me all of your records of people that have purchased vehicles. So they were looking for people who put $10,000 or more down in cash. So let's say they found a file that had somebody that put $15,000 cash down. They looked at this, they pulled that tax return and they said, okay, this is a doctor. He's a medical doctor. He can afford this. Somebody else might have been a business owner. But then they got to one where the person was the head bellman or butler at the Marriott and his wife was a maid. And they had put $28,000 down on a brand new Mercedes Benz. These are the kind of sneak audits. And I got that case and it ended up being really bizarre because the husband did not know that the wife had done that for her drug dealing nephew. And when he
Wow.
found out, it was, put it like this, I hightailed it out of that house. But so that's a sneak audit. And then you have the market segment specialization program audits. An MSSP audit targets specific markets. For example, specific cash businesses like a laundromat. For the what they do is they presuppose that all these businesses, they're going to deduct all their expenses, but they're not going to report all of their income. So they go after the expenses. So in the case of the laundromat, the agent like myself will go in and ask questions like, okay, how much do you charge for every washer that you have? And they'll say, okay, we charge $2 for the wash. How much do you charge for the dryers? And they say, we charge $1 a dry. Well, the IRS Central has calculated based on the water bill that these people give me, how much money they make based on the water bill. So how much money did they make based on the electric bill? How much money did they make for the dryer? And then if there's a discrepancy, then I come back and say, well, you said your laundromat made $50,000 this year, but based on the IRS calculation, it was 80. Where's the other $30,000?
Wow.
And a lot of times they acquiesce because they have taken money. They don't even know how much money they've taken. The beauticians is another one. They have calculated, they found a way to calculate how much money these ladies make, or even men, based on the expenses for the shampoo. So a 48-ounce bottle of shampoo versus a 24-ounce, and how many heads all I would have to do in and say, go in and say, well, how much do you charge for a washing set? How much do you charge for a relaxer? And then they calculate how much these people made based on what they actually wrote off in these expenses. And so when I go into a hairdresser and say, I just finished going over your books and things, and you put down that you made $80,000, but it looks more like 150. They're shaking in their boots because every Friday they know they took that cash home, and they don't know what else to do but acquiesce to that. So that's the MSSP.
So I'm gleaning a few things from what you just said. I mean, first and foremost, it sounds like your basic correspondence audit is no big deal. Send them the information and see what happens. When you start getting to the sit down and the higher up audits, it's time to think about your CPA and your lawyer if you can afford it. It also sounds like they assume you're guilty, but the other side of that is it sounds like the worst case scenario, mostly, unless they can find something real criminal, is that you pay, right? So
Yes.
they say, this is what it looks like to us. You say, I don't have records that can disprove what you're saying, so I'm going to pay you this extra $10,000. But no one's putting handcuffs on you for kind of like the basic mistakes or the basic underreporting, unless they can find some kind of criminal intent. Is that right?
Right. So usually the rule of thumb was if you've underreported by 25%, then there's a problem, and that case may be turned over to the criminal investigation division. Or if you see something that's blatant, you turn it over to the criminal investigation division. Yes. So most of the people aren't going to be investigated in that way just for leaving off money, but if you do something that triggers it. I had a case before, one of those sneak audits, they went into a construction company that had not issued 1099s. They took $300,000 worth of deductions for the labor, but they didn't. And when they were forced to issue 1099s or lose that $300,000 deduction, then all these 1099s appeared. And then they had us go after the people that had the highest 1099s. And then those people, one of those people, I got him, and he offered me a bribe so that I wouldn't put all that extra tax back on it, because he had not only not reported that 1099, he didn't report a whole bunch of other 1099. So these are the things that happen within the walls of the IRS.
How successful, and I know it's hard to answer this because I'm being very general here, but if you are audited and you do have the support to hire a lawyer, a CPA, what have you, how likely is it that you're going to be successful in fighting an audit?
9 times out of 10, you're going to win, as long as that person went in. First of all, as long as that person is not fearful of the IRS, and as long as that person went in with all of your defense, your records. So let's go to the first one. I've had clients that came to me after the fact and said, I hired this person. They went in and they were almost bowing to the IRS. They didn't help me. They threw me under the bus. So you don't want someone that is fearful of the IRS. Then I've had other people that said he went in and he just didn't have anything, and he just was sitting there answering questions that I could have answered. So going in with a CPA or an attorney is very key if you don't know what you're doing. I don't suggest anybody go in before the IRS, because you have a 45-minute initial interview and you can get trapped, because loose lips sink ships, and you might be praising your business and saying things, and really you're setting yourself up. So no, I really like people to go in, if they're going to go by themselves, have someone like me in behind the scenes that has told them what to do when they go in.
Yeah, and I guess the other side would be you get a good CPA or lawyer and you don't have the material to back it up. They're going to say, look, go in and pay and just move on versus let's fight this, because they're going to be able to look and see what you have and see if you have a reasonable case.
Right. In that case, I have people that have done that, and I just kind of know based on my experience how they can okay, there's something called, and this is one of my little secrets, so I'll let you guys know. There's something called the Coen Rule, and the Coen Rule says if you have income as a business owner, if you have income, logic would dictate that you have expenses. So you can back extrapolate some of that. You can go and, recreate some records. A good example is I had a woman, and this was kind of a sad case. She got diagnosed with MS. And when she got back from the hospital that day, she had an audit letter in the mail. And she had already talked to me about talking, doing a seminar in her business. She called me crying. She said she's got this letter. I said, we're going to fight this. She didn't have the records. She was one of the ones that said, "Oh, I have my debit and credit cards." And I said, "Okay." So going back to, I asked her who her vendors were. Some of her vendors, see, a company has to keep the records for 3 years. So we were able to go back to some of her vendors and get these records. She didn't have everything, but we found out that when she did go back, she had more expenses than the accountant put on the tax return. This happens a lot, Jordan, because they're afraid. They kind of reserve these people's, expenses so they can have an audit, and that's not good. Go for it. Put all the expenses on there and keep your records. So she ended up getting money back because we went back. She had some pretty decent sized vendors that kept records. So she went back and got those from everywhere. And once I taught her and her husband what to do, they just made it their point. And she wrote me a great testimonial about how, she wouldn't have known to go back to get those records. American Express is a good example. They keep records like 7 years, and
Yeah.
they have details in theirs, not just the credit card, but they actually have the detail in there.
So I'm thinking, like, for instance, for my business as a podcaster, I go to lots of conferences. If I got audited and I couldn't find that receipt for the United Airlines ticket, but I had the receipt for the conference and the hotel and all that, it would be easy for me to go to United Airlines and have them recreate or send me a copy of the receipt, what have you. But I'd have to do the work. So I
That's
want
true.
to end this. Good.
That's true. And even, I had one like that went to a lot of conferences. It helps to have the agenda for the conference to show, and your hotel receipt, all that in a package. So I've created a spreadsheet, even with the tips, because you pay cash tips to the people, the Uber people and the people that take your luggage. I created a cash tip sheet to go in a package with all of your expenses for that particular trip. So that's going to win you an audit. Then they'll look at that and they'll say, okay, we're not going to get anything here.
So I want to end on a positive note. Given the fact it sounds like having the right help behind you can really mitigate these situations. If you find yourself stuck with an audit or stuck having problems with taxes, how do you find a good CPA or attorney? Are there any qualities that specifically you look for or tell your clients to look for when it's not you? Because obviously you're going to do some of this, but what advice would you give people about this?
I would tell them to look at the testimonials or reviews to find out if this person fights for you. I would ask them how much experience they have in audits. I would ask them how many audits they actually win. And I would ask them, how do they handle an audit? Because you can get a lot out of someone sitting there telling you how they handle an audit. You need to find out whether they're fearful of the IRS in the first place, whether they're thorough, and whether they have some testimonials of people that say, I went in and they said I was going to owe $19,000 and I ended up owing only two.
Well, Dr. Sherry Peele Jackson, I wanted to thank you for coming on the show today. As I think about our conversation, it's clear the system of taxes is skewed against us, especially as individuals and small businesses. On the other hand, with the right help and patience and good records, we can not only protect ourselves, but use this flawed tax system to help us generate wealth, get the most out of our businesses, uh, and eventually get the most out of our hard work, right? We are the ones doing this hard work, so we deserve to keep as much of that money as possible. I want to end this episode the way I end every episode. First and foremost, tell us about your business, and specifically, if people want to learn more or maybe engage you, how would they do that?
Well, what I do now is, like I said, help people starve the beast, which is, ethically and morally, and not get them in trouble with the IRS, making sure that they can start a home-based business or grow their home-based business and write off everything but the kitchen sink legally. I help high-earning employees that want to transition over to being entrepreneurs or either just have a side business. And I really help small business owners that are struggling with the taxes and with business setup and where to set the business up and all of these things. And they can get in touch with me through my website is sherrypeeljackson.com, under construction now, but connect at sherrypeeljackson.com is my email.
Sherry Peele Jackson, thank you so much for being on Earn and Invest today.
Thank you so much, Jordan, for having me.
That's a wrap. All right, I leave
Okay.
things running just for a few minutes to catch our after show.
Mhm.
I love this conversation because it's one we just don't have a lot. And the specter of the IRS and an audit just scares the heck out of people. It scares the heck out of people to such an extent that they probably leave lots of money on the table.
Yeah, they do. They do. I've seen people that leave like 10,000. So why didn't you write this off? And it's like, well, my CPA said we need to leave it aside just in case we get audited. I'm like, no, baby, this is a lot of money that you could have gotten right now. I mean, there's a time value to money. And if you
Yeah.
got money over here, and most people don't get audited. Most people don't get audited, especially now, that COVID is going on. They're
Mhm.
still behind. They still haven't doled out some of the 2021 tax refunds because they don't want to go back into the office. They don't want to go back into that environment. So it's more than likely you're not going to get an audit. It could be a correspondence audit, but take all of the deductions that you are due and just make sure your records are there and keep them. You're supposed to keep them maybe they say 3 years because there's a 3 year statute of limitations. So after 3 years, even if you did mess something up, they can't go after it unless they figured out that you did not report over 25% of your income and
Right.
then they have 6 years. So keeping your tax returns in some place on, I don't know about on some kind of a flash drive or in some kind of a fireproof folder for 6 years, then you get rid of them and take your deductions. But with that, keep good records.
I love your confidence. And I think, it reminds us that we are, I hate to say it this way, but we are American citizens. We have the right to defend ourselves. We have the right to be confident. We have the right to hire experts to come in. And it really hit me as you were talking about this, how important that is
Yeah,
to when you
it
do
is.
show up, not be arrogant, but basically say, this is my right and this is my income, and almost put the onus on them. No, 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 you have to prove to me why you get this money out of my pocket. And I love that look at it because it really turns, again, something that becomes anxiety provoking to the extent that we don't keep what we should
Right.
to something that feels a lot more powerful, which I think a lot of us could really use because the grand majority of people, well, I don't know, you could answer this better than I could, but my guess is the grand majority of people want to do things well. It's just they get overwhelmed and they're unable to in lots of different ways. So there is a small percentage of people who are just trying to defraud the government. And that's why we have things like the IRS. But I'm sure there's a huge number of people who get audited, who get caught in this wheel, um, who really meant well, but probably either didn't have the ability or now don't have the ability to defend themselves.
That's correct. And then those are the ones, unfortunately, that end up paying because they don't have that legal representation or the CPA representation.